Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX walkthrough. Going to get started in just a moment. What I'm going to do tonight is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up DailyFX.com, and usually the first thing I do when I get there is go down and click on Jamie's report. So let's see what he has to say about the market today with the synopsis on top. The U.S. dollar is giving back gains to the euro, while the Aussie and the Kiwi have reached their bearish objectives. Additional euro-dollar gains are expected. But let's scroll down to the dollar-yen, as that's what I've personally been following in the past couple of reports. And again, Jamie's been spot on in calling for the decline against that shorter-term daily trend line. Let's read what he has to say about dollar-yen. Dollar-yen broke below 100 as expected, and bears are gunning for the March low at 95.71. A break of that level is eventually expected as well. Near-term price ideally remains below 103.30. Short-term resistance is at 101. So let's go ahead and pull up the charts. And if you recall, yesterday I was speaking about that 100 area acting as support, which it did initially, if you see the update directly above this post. But then the prices then fell beneath that 100 level and actually closed beneath it. So in terms of that range playing out, I would personally abandon that theory, and it seems that Jamie's becoming very bearish on the pair, so that's something we should look for moving forward. Right now I really don't see a solid entry in terms of risk to reward, but moving forward, if we follow Jamie's reports, try and get a good entry into the short trade. Again, his high level is 103.30, which is right there, which is the high of this candle wick right here. I know if you're watching this on YouTube, you might not be able to see the spikes, but believe me, it is there. So that's the level that he's calling for, the upper range of resistance, and he's saying also that short-term resistance is at 101. So what do we do with his information if we're short-term traders? Again, Jamie's bearish on the pair, but that doesn't mean, that we jump right in. So let's go ahead and pull up a shorter-term chart. And as he mentioned, short-term resistance is at 101. I've added simple Bollinger Bands to this chart, and we can see that the Bollinger Bands right now are just below that 101 figure. So that's something we can look for over the next couple of hours, possibly a move to that upper Bollinger Band. Ideally, what I like to see with Bollinger Bands is a nice spike, maybe a 20, 30 pip spike above that Bollinger Band, and then a close back beneath the Bollinger Band. So that could be something in terms of a short-term trade that might pan out. Of course, short-term trades, you have to manage your risk and abandon the trade idea very fast if the market kind of nullifies your exact view. So that's something to think about in terms of shorter-term trading. So that's a possible setup that I might suggest to look for tonight. Again, to recap, Jamie's very bearish on the pair, has been spot on, and we might look for entries as well. We can also draw the simple resistance line here. And we can see right now that prices actually are keeping below this resistance line. So this is something we can also apply for even a shorter-term trade. We can see this spike, and let's see how this candle closes. If it leaves behind a long wick, that could also be a confirmation as well. So those are the things that I'm looking for moving forward on the pair. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.